The current Canadian policy rate is at 3.75%. The latest cut happened on October 23rd, and it was the first 0.5% rate cuts since the cutting cycle began in June of 2024, and this 0.5% cut happened after 3 consecutive 0.25% cut in this cutting cycle. So how will the monetary policy of Canada play out in 2025 is the question we're going to answer today. Let's first take a look at the GDP of Canada. The GDP growth in Canada was weak in 2024, and this chart shows you real GDP growth, and it was here very weak, and the Q3 GDP performance was softer than expected, and the forecasted GDP growth for 2024 is only 1.1%. And the real GDP per capita is shown on the right-hand side. It's actually declined by almost 3% if we look at pre-pandemic peak, which happened in 2017 at $60.3 thousand per person, and now we're down to $58.6 thousand per person in the Q3 of 2024. What's the reason behind the decline of the GDP per capita in Canada? This is because of weak demand and high population growth due to easy immigration policies. And the year-over-year population growth, showing this chart here in 2024, is currently at 3.6%. It's over 3 times the pre-pandemic pace. Okay, pre-pandemic is here, and it's over 3 times of that in terms of population growth. And when there is a rapid population growth in a country, the economy is expected to also grow in theory due to higher demand from the growing population and higher labor supply. But unfortunately, in Canada, it has not fully materialized yet. Now let's take a look at the inflation situation in Canada. Most inflation measures are within the Bank of Canada target range of 1% to 3% range. And the headline inflation is currently at 2% year over year. Core inflation is at 2.3% year over year. Core inflation ex shelter, or no housing, the housing portion is excluded, is at 1%. Okay, only 1% when excluding the shelter on a year-over-year basis, and most inflation measures are below 2% on the 3-month moving average annualized basis. Is shown on the right-hand side over here. As you can see, most of them is on the lower end of the 1 to 3% range, or even lower, right? So it's pretty much safe to say that the inflation problem in Canada appears to be solved. And what is the Canadian monetary policy going to look like for 2024? Due to the weak growth in GDP and GDP per capita and inflation return back to target, the Bank of Canada will continue to shift its focus to stimulating growth instead of suppressing inflation, because inflation is no longer a problem and the growth is the problem. Okay, and the Bank of America has implemented 125 basis point of rate cut, or 1.25% rate cut so far in 2024. So future rate cut guidance has been described as dovish. Okay, and the Bank of Canada's Governing Council stated on October 23rd during the interest rate announcement that if the economy evolves as forecasted, further policy rate reduction are expected. And how much will the rate reduction going to be in 2024? Well, the upcoming Bank of Canada policy rate will be centered on the extent of the rate cut, not whether to implement them. So they won't be cutting for sure in 2025. It's just how much to cut, and how much do they cut is the question. And the interest rate will continue to be reduced towards the neutral rate. Okay, the latest neutral rate update was in April of 2024, and in this report, for this article, the neutral rate is range is currently at 2.25% to 3.25%. So the median of that of the neutral rate is 2.75, so pretty much 1% below the current rate of 3.75. So in 2025, they will be expected to continue lower the rate towards the neutral rate of 2.75. Thank you very much.